Well, hi everyone. Welcome to the weekend video. This is Enda from bullwaves.org, and just going to go through the markets just to kind of orientate you for what to expect next week, for what I expect anyway, at least next week. Right, I'm going to start with euro dollar, and as the week went on last week, we kind of updated this count to a full impulse wave to the downside, rather than the kind of previous 1-2 kind of 1-2-1-2 setup. Just given the extent of that rise off the low, it kind of fits a larger pattern unfolding here. So what we got is like a 1-2 wave 3, 4, and 5 to the downside, and an A and a possible B almost complete here. It's Sunday evening here in Ireland, so the Asian session will be opening. Well, it's usually around half 11 or 12 o'clock GMT. So I'll probably be looking for a little dip into the lower trend line there again before starting in wave C. We'll see how that develops. I'll know more tomorrow morning when the London markets starts to kind of grind into gear after the weekend. So what I'm be looking for in general next week is a completion of a three-wave pattern to the upside here, into about resistance here at 119.29. That's the Fibonacci 61.8% retracement. So at that point, we'll have wave 1 down and wave 2 up, and with a bit of luck, we'll catch a lower high here into wave 3 down. And that is euro dollar. Let's get rid of all this muck and mess. Right. So pound dollar, similar situation, but I think slightly developed a little. Sorry, it's a little further along in its development, and it's a little more complicated as per usual. This pattern to the downside, I think, is pretty clear. I think that's a 5 waves down. I think we've got 1, 2, an extended wave 3, wave 4, and wave 5 to the downside. And the correction, I have a feeling, is a possible flat correction with 3 waves up, 3 waves in B, 3 waves down in B, and then a 5-wave pattern to the upside in C. I think that could possibly be complete at resistance of 50%. I suppose it adds weight to the fact that the price almost came to the 50% retracement within a pip or two, and then started to back off on Friday evening. So I think for next week, what we'll start to, if we start to roll over again and we get a couple of a series of lower highs here, then we'll be looking into probably getting confirmation of wave 3 down if a break of support happens. If we get a break of this previous wave B here, which was at 131.17 or 131, call it 131.10. If we get a break of that level, then we'll be looking at kind of, it'll raise the odds significantly that we'll get a kind of a spill down into a wave 3, which I've been expecting for a while now. But anyway, all right, let's move on. Dollar yen, and this dollar yen has been updated. This chart has been updated since Friday, but in general, I think we still have this 5 waves up in wave 1 green. We've just been drifting sideways, going nowhere for the last, almost definitely 2 weeks anyway, nearly 3. Initially, there was a 3-wave move to the downside and a nice impulsive move to the upside, and then since that high marked wave A there at 113.27 or so, then we've just been drifting with no particular kind of no particular bias in the market. So I think we're still stuck in this wave 2 here. It seems to be tracing out a kind of a complex triple combination, 3 waves down in A, 3 waves up in B, and probably a 3 waves down into support. About 111.40 is what I'm looking for right now. If we get the previous fourth wave low was 111.05 or so, I think. So if we get a dip into 111.05 and then a turn higher again, yeah, that'll be very interesting. That's one to watch for the week, especially if we follow that, if the parallel trend channel there begins to support the price after dropping into support and then rising along that parallel trend channel, then we'll be looking at a decent opportunity for a rally in wave 3, which should carry the market far higher. If you look at wave 1, let's get a Fibonacci there. There's the high of wave 1. If we get a drop into about the 111 area, then wave 3 green is projected to above 119. So you're talking about, let's get a line there, 119.70. So above 119, you're talking about an 800 point rally there. Another point to notice here is that the 200 period moving average is rising again after a significant period of doing nothing. The 200 the moving average is rising again, so price is approaching that moving average rapidly. If we get a touch off that price, and again we should meet around that 111 area, the price and the moving average. If we get a touch off that moving average and a bounce to the upside, again we're looking at a pretty bullish scenario. Let's see how that one develops. Obviously, day by day, these things change, so you just have to stay on your toes. Right, here is the Dow. I think what I've been working with over the last week or so, I think the top is just it's as close to in as we can get right now. This drift to the upside is pretty indicative of a market that has lost all momentum. There's no bid behind this this price rise. It's just, I reckon if it threw up the volume there, the volume is probably just diminished to next to zero. The last few cats are getting in, and they're going to be seriously burned on this one. If we look at this pattern here, I have an ending diagonal, and an ending diagonal is a 5-wave pattern, but each internal wave is broken into 3. I think that's probably the best way to view this at the moment. How those, we might print another high, and it just kind of reforms the internal kind of structure here, because we could be looking at let's say 1, 2, 3, 4, 5 into Friday's high, or we could be talking about 3 waves up. 1, 2, 3, 4, 5. If you can follow that. So that would mean another high, in around the 22,900 area, which we're still within the Fibonacci range, because we have a target up here where where wave 5 pink, which is this wave we're tracking right here, where wave 5 pink reaches 161.8 times wave 1 pink. So that comes in at 22,967. Anyway, I think we're at the end of this. I'm ready to throw caution to the wind and say that the top of the market is in. We're reaching trend lines. We've reached the end of any momentum in the market. We have on the 4-hour chart, we've got downside divergence against a rising price. There's no steam left in this at all, and I think you would be foolish enough to start buying into this market right now, especially at its extended state right now. And I can count, at least 6 degrees of 5-wave patterns to the upside. So no, thank you, sir. From here, I'll be looking for a sharp move to the downside and a break of that 200 period mover average, and break of previous support, break of previous fourth waves, and that's the next kind of phase of what we'll be looking for in stocks. So a beginning of the end, as they say. All right, let's get into gold. Is it gold? Yeah. So it's been a pretty damn good week in gold. I think we have our bullish signal in place. We have a 5-wave pattern in wave 1, a 3-wave pattern, pretty damn clear, 3-wave pattern in wave 2. And off that 3-wave pattern, we had a move to the upside. Now, there's one note of caution that I want to make is this 3 waves down where I've marked wave 2. Is this developing into a 3 waves down, 3 waves up, and then a 5-wave down into an expanded flat? Only time can tell. So that expanded flat would look like A, B, C in wave 2. So we'd come back down into a support around 1280 again. One more time. Ooh, God, that was horrendous. One more time into 1280 before setting off in wave 3. So far, so good on the rally of support. But like I said, so far it seems to have traced out 3 waves, and it's within a trend channel. If we get a break, say, of this lower line in the trend channel, again, say Monday, or probably Monday or early Tuesday, then we'll probably switch to that alternative wave count there. Now down into gold, down into oil, crude oil. Yes, we're on the 30-minute chart here, and again, this kind of this rally here that happened early last week kind of threw the cat amongst the pigeons a little bit and altered the kind of structure of what's happened off the low. I think we still best count it as a 5-wave pattern to the downside: 1, 2, 3, 4, and 5. And I think what we are seeing develop right here is A, B, and a C to the upside. So we'll probably threaten resistance there, 52 again, before the week is out. We have met minimum target, let's say. We've broken wave A. So minimum target for wave C of an ABC correction would be a break of the wave A high. So we've broken that wave A high on Friday. And what remains to be seen is the decline off that high. Does it develop downside to the downside in a kind of an impulsive fashion? If we get, again, the previous wave B is always a good indicator. If we get a break of that wave B there, let's get a price on that in around 50.40. So if we get a break of 50.40, say down into 50.30 or 50.20, then I'd be very interested in calling that the high of wave 2. And we should see a clear 5-wave pattern and a 3-wave corrective rally off that high. So for this week, it's kind of that dual scenario there. Do we have a high in place already, or do we see one more pop to the upside up to that upper trend line there of the trend channel? I think Monday should kind of sort that out. The price on Friday kind of finished in a bit of a bullish kind of scenario, or a bullish stance, let's say, because the decline off that high on the short-term chart is. I wonder, can we get down to the 15-minute chart there? Of course we can. Yes, sir. And get rid of all those scribbles. Yeah, the decline off that high seems to have been in 3 waves, and we've hit that moving average there, which I've shown on the short-term chart. I don't show it on the, maybe I should show it on the other short-term charts. But anyway, we have 3 waves off the high, so that kind of, and an impulsive-looking bounce. So this could probably develop into a 5-wave pattern to the upside. into the upper trend line there. What we don't want to see is a break of 52.88. That's the kind of point of no return for the moment. That's the invalidation for the immediately bearish wave setup. And that brings us to the end of this week's video. I've still probably gone too long and too far, but that kind of gives you a roundup of what's on the tip of my tongue, basically, for what should happen this week. So Monday, again, always brings a little bit of clarity. Let's see what we can come up with on Monday evening and where that leaves us for the rest of the week. So have a great rest of Sunday, and we shall chat to you tomorrow evening. Have a good one, guys. Bye-bye.